JSE has attributed its firm financials on a strategy to diversify revenue streams while delivering a competitive proposition to the market. That's as headline earnings per share have jumped 12.2%, while net profit after tax increased by 11%, and a 19.4% rise in return on equity has also been recorded. CEO Leila Fourie discusses this performance with us. Thank you so much for your time, Leila. How have shareholders responded to this performance that comes with a positive gain as well as dividend?
Hi, Tumisang. Thank you. Yes, our shareholders have really rewarded us for the strong performance against a very challenging backdrop. To get over 12% up on headline earnings per share when our biggest market, the equity market, was down by 9.5% in equity value traded, is an excellent result. And this is really because we've placed a concerted effort on building out new forms of revenue, diversifying our revenue. So we're not only concentrating revenues in the equity market, which is our biggest market, but we're building revenues in our bond market, the agriculture or commodities trading, in the trading that happens in FX and other areas. And then we're also building out new services. So information services, which is basically the data you see on these Bloomberg terminals, plus our JSE investor services. When a shareholder buys shares, all the administration that is involved in administering those shares, that business was up 20%. And so we really have worked very hard to try and increase our diversification. And what we've done mostly is to invest in modernization and in partnering with global partners to increase the quality of what we offer. We recently announced a partnership with Amazon Web Services, and we are constantly upgrading and improving the sophistication of our capital markets and the ability for our participants to trade on the exchange.
And what type of gains are you looking to see from that diversification, as well as growing in terms of ensuring that the JSE meets the standards of its competitors across the globe, even right here at home on the domestic level? Because what we saw with some of the delistings at the beginning was that the JSE is not necessarily as modernized as it should be in the current day. How do you respond to that, Leila?
Tumisang, we are actually, we punch way above our weight, our emerging market weight at the JSE. The technology that we offer is world-class. Our equity trading system is some of the best in the world. We use the London Stock Exchange technology. It takes 10 nanoseconds to get a trade through our environment, which is one of the fastest in the world. On the delistings, this is a global phenomenon, and we've also seen a change in that environment. We're seeing up to 10 new listings looking to list. So we buy cars, Boxer, which is an unbundling from Pick and Pay, Rainbow Chicken, and then a number of mining and resource companies like Marula Mining, Vanadium Resources, and also there are a number of infrastructure plays which are looking to list. So we're seeing a shift in the listings environment, and the JSE plays well above its emerging market weight in sophistication, technology, and our ability to deliver good quality financial markets.
Speaking of new listings, what's to be said about the local market being conducive enough to attract foreign entities along with investment then?
So, in fact, as I mentioned, some of those listings that we're seeing are coming from the London Stock Exchange, NASDAQ, and the New York Stock Exchange. So we're seeing listings from global companies that are listed offshore coming to list on our exchange. In fact, last year, BHP Billiton, the largest mining company in the world, chose to delist from the London Stock Exchange, and they held their listing on the JSE, and they retained their primary listing on the Australian Stock Exchange. And this is a testament to the fact that we have deep and liquid capital markets, Our pension fund and asset managers are heavily invested in the country, and we offer a very sophisticated level of liquidity and value traded relative to other emerging markets.
On that note, is it fair to make the assumption that the near-term outlook is positive at this point in 2024?
Tumisang, it depends very much on how the elections go. Right now, there's a lot of uncertainty in the market, both globally with 40 elections and locally with our elections happening in May. Investors are taking a bit of a wait-and-see attitude. As soon as the elections are over, to the extent that investors are convinced that we're going to grow the economy, we're going to sort out our power crisis, we're going to sort out Transnet and the logistics and start reducing our unemployment, we will start to see flows coming back into the country. But it's really all about macroeconomic and political certainty and delivering of infrastructure on the ground in order to grow the economy.
Thank you so much for your input. Leila Fourie is the CEO at the JSE, talking us through their positive results as released earlier today.